Welcome to this week's Shore Report. My name is Robert Yanachak from the Shoreview Real Estate Team, and it's June 14th, 2024. I appreciate you joining us. Big news this month. You probably heard the interest rate has dropped by 0.25. The Bank of Canada just dropped it in the last week. Still a little too early to tell how that is going to impact the market. We're going to see in the coming weeks, in the coming months, and we'll see how that, what kind of impact that may have. We all have some predictions, but we won't really know until a little bit of time passes. So a lot of different factors right now that are impacting the market. Obviously the interest rates, obviously the past inventory, the past sales, different market sentiments, economic factors, employment, unemployment. Some unemployment stats just came out today. Very high unemployment in Toronto. It's we'll see how that impacts. But let's go through some of the numbers and some of the market stats in the last month. Overall, the big thing that's having a big impact on the market right now, if we were going to summarize it in one word, that would be inventory. Right now, we're seeing that the market has a lot of inventory, a lot of homes have been listed for sale in the past 3 months, and that inventory is building up. In addition to that, there's new inventory coming, and the sales are there, but they're just not keeping up with the inventory. So if there was one thing we can say about the market is high inventory translates into some good buying opportunities right now that we're seeing. But let's go through the numbers. So in the GTA, sales are down 21%. Sales are down 21% from last year. Listings are up 21%. And overall active listings are up 80% plus, just over 80%. So what does that mean? Sales are down, listings are up, active listings are up. So again, like I was saying, inventory is accumulating because the sales aren't keeping up with the amount of homes that are being listed. Average sales to new listing ratio across the GTA is 41%. Listing to sales, 41%. That's across the GTA. Every city and market is performing a little bit differently. Here in Burlington, we actually have one of the highest listing to sales ratios at 52.4%. So 11.4% over the average GTA listing to sales ratio. So what does that mean? That means in terms of the homes that are being listed in Burlington, more of them are selling than in other markets. Toronto had a 39.8 average listing to sales ratio on new listings. Mississauga was at 42. Durham region was at 48, fairly high, and Oakville was at 41. So again, every market is performing differently. Days on market seems to be increasing significantly overall. So the time it takes to sell a home is going up quite significantly. Clarington and Oshawa in Durham region, they actually saw the highest list to sales average price. So at 105 to 106%. So what does that mean? That means in those areas, the homes are selling over asking 105%. So, and that's actually a trend that we're seeing across the GTA. So as much as there's a lot of inventory on the market, we're actually seeing that the majority of homes that are selling are actually selling over asking. So 105 to 106% in Clarington and Oshawa, and even Toronto was over asking, just over 100%. So what is that telling us? That's telling us that the majority of the homes that are selling are actually listed with a strategic pricing campaign. They're probably listed a little bit under market value. They're trying to get a couple offers, and they're going over asking. They may not necessarily be going over, market value significantly, but because they're being underpriced, they're going for more, and ultimately they're selling, and that's how we're seeing the majority of homes being sold, even in this market where there is quite a bit of inventory. Overall absorption rate, 41% on average. Burlington's 50%, 52%. That's one of the highest ones. Majority of the markets are under 50%. Majority of the markets are under 50%. And if we compare that to previous years, last year, our absorption rate in the Greater Toronto Area, in terms of the amount of homes that were selling compared to new listings, was in 2023, it was 50 to 60% on average, depending on the market. So most of the markets fell in there. Right now, we're falling in between, at the 38 to 50 range right now from what I see in the majority of the markets. Last year we were at 60. If we go back to 2022, we were actually at 60 to 70% absorption rate. So we can see that in the last 3 years, the absorption rate is going down by about 10% on average. Pretty significant. Ultimately what that means is, again, a lot of inventory. There's a lot of mortgage renewals happening this year, happening next year. And due to that, people are looking to make some transitions, make some moves. We're seeing a lot of people make strategic moves where maybe they're selling, their primary residence and they're, buying something smaller, buying an investment property. Meanwhile, just selling that one primary residence. Different strategic moves. So there's people looking to make transitions. That's creating a market where there's lots of listings. And in turn, right now, with kind of the rates still being very high, even though they've dropped a little bit, the absorption is not there, the sales aren't there to support all those listings. We're going to see what happens, because now that the rates dropped, if they continue to drop, maybe there's some sellers that may revert back and not want to sell. And then in other cases, maybe the buyers will have some positive sentiment, and more buyers will come to the market and things will start moving. It's hard to tell where things are gonna go, but this is where they're at right now. I'm gonna follow up this video with a couple videos from Colin on our land and property investment team here at Shoreview, and he's gonna break down the immigration versus the emigration stats specifically in Ontario, and also he's gonna discuss the permit process length, that in terms of how Canada compares on a world stage with the top 35 economic countries in the world, and how we're the second longest permit process in the world. So check out those videos coming right up. Thank you for joining us on the Short Report this week. Have a great weekend. Enjoy the weather, and all the best. Hopefully this information was useful. As always, Shoreview Real Estate Team, we have a group of advisors. If you have any questions that are real estate related, feel free to reach out anytime. I'm Robert Yanachak. Take care.
We keep hearing about a mass migration outside the province and outside of the country, but when we really dig deeper into numbers, we see something totally different. Past 2 years, we've had an influx of about 825,000 people between permanent residents and temporary residents into Ontario. When we contrast that with the net migration outside of provinces, those who are leaving for Alberta, British Columbia, New Brunswick, some for more affordable living, some for other reasons, we're seeing a net emigration of about 60,000 people. So there's still a net influx of over 750,000 people into Ontario. And when we look at these numbers, that is consistent to a city the size of Hamilton. So the size of Hamilton has just dropped into Ontario, and we're not knowing how to accommodate this housing. Our housing starts are on a decline. We have a shortage of housing. So what's the solution? Well, the government has hinted at what the solution is. They're imposing 4 units by right in single-family homes. They're allowing you to build garden suites. They're allowing you to build laneway housing. So that's the solution. So tell me, what side of the fence are you on? Are you ready to convert your home into a 4-unit multifamily with a garden suite? Or do you prefer to stay in a single-family home? The investor mindset would tell me more units is key. How is it that in Canada, we have a mandate to build many more homes, yet the time it takes for us to acquire building permits is second last out of 35 countries in the developed nations around the world? When we compare ourselves to permits in the United States, we are 3 times longer to acquire a permit for general construction which equates to 168 days. The Royal Bank of Canada has announced that over the past 2 years, that equals to $100 billion in lost investment and revenue. So, are we serious about building? Are we serious about adding new rental stock? Are we serious about increasing the housing supply? Or are these just ideas? Leave your comments.